this video, I'm going to go over the trade I took on GBPUSD and how I went about it. And the first thing I need to understand is where are we in price and where we're likely going to draw into. And before the close of last week, I saw that there were what series of bearish candle. I need to find out where is price coming from. Like as always, I'm trying to find out where is price at and where is price likely going to draw into. And looking to the left side of price, I can observe this daily time frame order block over here. How do I know it's a valid order block? The first thing I need to see was a purge of liquidity indicating liquidity has been taken out from that side of the market. Also, I can find a break of structure indicating a change in trend, or we can just cause a very small pullback in the overall trend. Now, I need to find a continuation from this expansion leg that can use to trade price action into the nearest stop hunt. Right now, second thing, I move down to the lower time frame to find an area or a zone of interest I want to take my short idea from. Now, while scaling lower, I found the break of structure here indicating what this lower time frame shift in market structure. Now, also that same area that caused a shift in market structure, I found this order block that failed. Now, I picked my order block from the body, my breaker block rather, from the body. Why? Because it overlapped with what? It overlapped with this fair value gap, right? Which overlaps with this fair value gap. Now, I know for a fact that the breaker block and the fair value gap became my zone of interest to take high probability short trade ideas. Now, so I scale low as well. All right, on the 1 hour time frame, I found this structure. Now, this all puts up all my puzzles together. Why? I also found another stop hunt indicating that I don't expect price to move any higher than where it is at presently. All right, this hold high has that stop hunt, and when we have those stop hunts, I don't expect price to drive above that area anymore. All right, and that was my confidence to take a high probability sell idea. Now, what I needed to see was price reaching up into this level and finding a reaction to take a high probability trade idea. Now, at the extreme level, the highest form where I want to see price reach up into was actually this high. Sorry. This area and price. Now, if price break above this high, I know for a fact that maybe that bearish structure is not as strong as what it is. But what increased my confidence is because I have higher time frame context. Now, having higher time frame context was just based off structures alone. Now, moving forward, price has reached up into that fair value gap, which overlaps as well with the breaker block from the left. Now, I did not find any lower time frame confirmation leg in that pull down, so I just waited for what price has to offer at those key level. Now, at the same time, I also spotted on the lower time frame over here, I also spotted a 5 minute breaker block of interest. 5 minute breaker block of interest, because we know that zone, this particular zone here, is actually a 1 hour order block. Then I found a 5 minutes breaker in that 1 hour area, that 1 hour zone. This was the breaker block range. Now, at the same time, still, I did not take any aggressive entries because I don't want to be caught on the wrong side of entry, and I want to take the best entry I can get from this trade idea. So I need to see price reach up into that zone, and then we'll use your confirmation entry to enter that particular setup. Right before that point of interest, price created a good level of inducement right above my key level. In as well as it created that double confluence, I also observed that high was as well formed in the Asia session, which that alone is enough confluence to know that there are two things being paired up together: structural liquidity and time-based liquidity. And at the key time in London session, price took out that inducement high. Now, price took out that inducement high, but price did not reach up into my point of interest. Now, a lot of people already FOMO'd and possibly entered the trade here, panicking why price did not reach up into their point of interest. But once you understand the idea behind price, you know that price just creates a lot of manipulation right before hitting your key level. And it's a very common thing price does before hitting your key level. Price makes a very clean break of structure to the downside. Now, price have reached my key level, my key point of interest. Now, if you turn on the session indicator, you notice what happened. Price took out Asia's high. London took out Asia's high. It dropped. At the same time, New York came to come and take out both Asia highs and London high all together. Then what do I have at the back of my mind? What has been paired up together? Time-based liquidity, and as well, I've gotten to a key level, which makes it a higher probability setup to take short position into higher time frame key level. Now, where was my drawn liquidity? My drawn liquidity was where price started from. Where did price start from? This area was Monday's low. Now, I'm moving from time-based liquidity structure POI to time-based liquidity low. That's internal to external range liquidity. And what I did at this point in time was I switched time frame to the 15-minute time frame, and then I found a reversal model occurring at my particular key level. And what's the next thing I did? I placed my limit order at the open of that candle. Placed my limit order at the open of a candle, and that was how I went about taking that stop loss aggressively this week's high. Then I was targeting the sell side liquidity, and that was how I made 4% on my 100k from the next account. I'll see you guys on the next one. Yeah, bosh.